So on my last couple of videos talking about Tesla, a lot of people said that Tesla is way overvalued even at the price point it is. Now the stock is down about 66% year to date, and I'm going to be answering these questions of should you buy Tesla, what's going on with the company. This is going to be a comprehensive Tesla stock review, so I hope you guys all enjoy it. If you have any questions, let me know down in the comments. So let's jump into it. So starting off, what is Tesla? I think we all know what Tesla is, but Tesla is the leader of the electric auto space, right? They sell pretty much electric vehicles. Not to mention they've gotten a ton of popularity because of their autonomous driving and because of Tesla Solar, which converts solar panels into electricity. And not to mention Elon Musk, the CEO, is one of the most talked about CEOs out there. I know you might be saying, well Carter, if the stock is so great, why is it down 66%? Let me explain. So the very first thing is Elon Musk bought Twitter. Now I think we all know this. He paid $44 billion for this company. Now a lot of analysts, and myself included, believe that Elon over the past year has spent way too much time with Twitter rather than Tesla, which Tesla sacrificed, and we've gotten some sell-off from them. And not to mention Tesla's plant in Shanghai has been shut down due to COVID restrictions. So I definitely think, how can a company produce money when the plant's shut down? It just doesn't make sense. Now with all the hardship Tesla has faced this past year, their revenue is still up about 55%, which is pretty decent for a company that honestly has been very volatile and has been selling off 66%. Tesla right now has a price to earnings ratio at about 37. This is some of the lowest points we've seen since 2020, and I think we all know what happened in 2020 with all the lockdowns. But you may not notice, shortly after the 2020 crash, Tesla stock skyrocketed up. So yes, we could be looking at a point where right now Tesla has sold off a lot, and there could be buying pressure starting to step in. And as of today, this stock is already up 5%, so we could be seeing some sort of reversal. Not to mention, there is some support near and around this $106 mark. So looking at the chart, you'll notice we've just gotten a tendency to get buying pressure near and around that $106 price point. And not to mention, getting back to the price to earnings ratio, I know a lot of people might be saying, well Carter, you know, a 37 on a price to earning is way too high for a stock. Yes, you may be right for a stock, for a value company, but for a growth stock, you do pay a premium because it's a growth stock. You're expecting growth rather than a value company which doesn't have as much growth and pays more dividends and just kind of doesn't fluctuate as much. Also, Tesla's average return rate is 49%. So through all the hardships, the ups and downs, the 2020 crash, it's had an average return rate of 49%. And given these circumstances with the price to earnings and the average return rate, by 2025, Tesla stock will be trading for over $400 a share. And they've been doing relatively decent for their deliveries. I understand this next quarter may be a little more volatile just because of the productions that has been shut down, you know, over the past year. I completely understand. But when you invest, you don't invest day to day. You invest in a company that you believe over the course, you know, of the next 2 to 5 years is going to grow. And I believe Tesla stock, looking back, you know, 2 to 5 years, we're going to be wishing we would have bought Tesla stock at these prices. Also, Wall Street's average analyst price target for Tesla is $256, right? That's a return of about 116%, which is crazy. So right now could be a great opportunity to start investing in Tesla at its lows. I understand there's going to be volatility, ups and downs, you know, and I think a good strategy going forward with Tesla would be to dollar cost average it. Invest weekly, monthly into the stock. The reason why is, yes, this thing could continue to sell off. It easily could, but dollar cost averaging is a great way because you're going to be averaging down your prices because you're investing weekly or monthly into the stock. Now when the stock recovers, your average cost moves down lower, so once the stock recovers, you make a lot more money. So guys, that is it. I hope you guys all enjoyed the video. If you have any questions, let me know down in the comments, and I hope that simplified it on why I'm buying Tesla and answering that question of should you buy Tesla. So we'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.